Now we go on to number 4. It was discovered that goods had been sent to a customer on the 31st of the 12th, 2018 on a sale or return basis. These goods had been entered in the books as a credit sale of 7,500, which is a markup on cost of 20%. A credit sale is a sale that we make to debtors. We sell it now and then we get paid later. However, in accounting, there is no such thing as sale or return basis. So, in other words, what we have to do now is correct this wrong. And how do we do it? We go back and we look at the workings. So we were selling it for 7,500 divided by 1.2, and that gave me 6,250. That's how much we had it in our stock at 6,250. So we're going to reduce the sale now. So how do we reduce the sale? We debit sales in the trading account 7,500, and we credit debtors in the balance sheet 7,500. So we're reducing our sales and reducing our debtors. We're increasing our closing stock, debit closing stock in the balance sheet 6,250, and credit closing stock in the trading account 6,250. Now we go to number 5, and number 5 now is, this wasn't that easy. A patent is to be written off over a 5-year period commencing 2018. So back into the trial balance and look at what the patent says. And as you can see then, the patent is incorporating 5 months investment income, so 43,500. So that figure is wrong. So we've got to go back and calculate investment income. So the investments were 360,000 at 3%, and we had it for 9 months. So that gave a investment income of 8,100. So 9 months equates to 8,100. So 5 months of investment income equates to 4,500. So that's 8,100 multiplied by 5 over 9. So let's reflect that in the accounts. So we go credit investment income in the P&L 4,500. Why? Because it's a gain. Debit the patent 4,500, and the balance sheet we're increasing the patent back to its original cost. So then the patent in the trial balance is 4,350 plus the adjustment of 4,500. So the patent was actually worth 48,000. Divided by 5 years, so it's being amortized over 5 years, so that's 9,600. How do we take that into the accounts? We go debit patent write-off, it's like depreciation in the P&L, 9,600. Credit the patent, 9,600 in the balance sheet. Now let's move on to the next adjustment, adjustment number 6. And adjustment number 6 then is at the suspense. The suspense figure arises as a result of an incorrect figure for debenture interest. So debenture interest in the trial balance is wrong. So that's what we have to look at. And also discount received of €460 entered only in the creditor's account. So let's then have a look at the debenture interest and what it should have been. Now, the debenture interest, the debenture for the first 3 months was 240,000 at 7% multiplied by 3 over 12, which is 4,200. And the 4,200 minus already accounted for was 6,400. So in the accounts we have 6,400 and we want to reduce it to bring it back to 4,200. So there's a reduction in debenture interest. And the adjustment for that is as follows. Credit debenture interest in the P&L 2,200, debit salaries and general expenses 2,200 in the profit and loss account. Why salaries? Because salaries and general expenses include suspense. And then the discount received of 460, which was entered in the creditor's account, was not entered in the discount received account. So we credit discount received 460 in the P&L because it's a gain. And we debit salaries and general expenses in the P&L of 460. Why? Because it includes suspense.